Let's talk about mutual funds. As this is the Mutual Fund Corner, we have Kaustaubh Belapurkar of Morningstar to answer all your mutual fund related queries. Before we get on with the queries, Kaustaubh, we're meeting you for the first time after the budget. What did you make of the budget and the announcements that came by and their impact on the mutual fund investments?
Sure. So, if you look at it like a couple of things that have swung the needle. So obviously the removal of DDT now, dividends tax in the hand of investors.
Right.
I think that's a big shift because we've seen that there's a fair bit of money that's been lying in dividend plans of equity and balance funds. Now clearly that's going to become tax disadvantageous. In that sense, if you're in the higher brackets of tax, so that's something investors will need to be, aware of and take actions as after consulting their financial advisors.
All right, well, this is a subject that we can go on and on, but we haven't answered mutual fund queries for so long, so let's get down to that. Vimal has written to us from Madhya Pradesh, so he has investments in various funds. So let me just get that up for you. He has a DSP Natural Resources and New Energy fund where he's chosen the direct option, Franklin India Smaller Companies Fund, L&T Emerging Businesses Fund, Aditya Birla Sun Life, Frontline Equity, HDFC Hybrid Equity, and Kotak Standard Multi-Cap Fund. Now he's not given us a sense of how much he wants to collect, how long he's looking to invest, or even what his risk profile is. So this is basically just a bunch of funds. We don't know to what objective they are sort of stitched together. Therefore, if you were to just see the funds themselves, any red flags here?
So a couple of things. So one is obviously when I just look at the allocations across the funds, clearly he's got a fair bit of exposure to the natural resources and energy fund, and as we've always been saying that typically limit this to about 5% of your portfolio. You want to have a core holding of purely diversified equity funds. So that's the first thing that I ask him to do, and then kind of in lieu of that, increase exposure to large and multi-cap funds. That would be because he's already got a couple of small cap funds in his portfolio. That's one. The other thing that we'll probably want to review is the L&T emerging business. Given that Larry, the CIO has quit, so we want to see how that transitions. The new manager. So that's something I would want to keep an eye on.
New owner. Okay. Anything more you want to add?
No, I think obviously, debt is kind of missing from his portfolio, so I don't know what the rest of his portfolio holds, but that's something that obviously, like you rightly said, we don't know his risk profile, but debt with some, in terms of emergency liquidity, just reducing walls in your portfolio is something you would always want to look at adding.
All right, a fair point. We have another query coming in from Bengaluru. Varun Dambal writes to us. He has invested in mutual funds via the statement of account through lump sum investment board. He wants to know the benefits of conversion of physical statement of account MF units into online DMAT mode. Also wants to know if he can invest in mutual funds in DMAT form instead of the physical form. And he says he's a 35-year-old working as a communications consultant, earns a salaried income, and also is a bit of a naive investor in his own words. So, good place to start. He's gone into investing via the SOA form. What are the benefits of dematerializing that?
So, DMAT, the biggest sort of that you have all your sort of holdings in one umbrella. You can see all your holdings. If it be shares or bonds or the funds. Obviously, there are platforms that allow you to buy and sell, like the BSE or the NSE platforms that you can buy it in the DMAT format. So there's no harm if he wants to go down that route. Just keep in mind that there will be a little bit of a DMAT charge, which the bare minimum DMAT maintenance charge that comes along with it. But otherwise, I don't see any showstoppers in that sense for him to not switch to that mode.
Okay, but the traditional DMAT, when a retail investor uses the word DMAT, they probably tend to use one of the larger platforms which don't allow for investing via the direct route, right? They only have the regular plans. So is it therefore preferable to even choose the platform?
Absolutely. So like the platforms that I mentioned will allow you to buy a direct, so depending on what the choice the investor has, he would probably want to go for a platform that allows him to buy all possible units, plans that are available to him.
All right, Kaustaubh, before we slip into a short break, the bottom of your screen, numbers from Gujarat, Pipavav, decent revenue growth, 12.5% out there. EBITDA has also grown, and the net profit, the big jump that you're seeing in the bottom line is courtesy this deferred tax of close to around 44 odd crores. But the stock has seen a sharp surge owing to decent revenue growth, decent EBITDA growth, and an added booster coming in on the bottom line, the stock higher by 16%. We take a short break, come back, we focus on answering more mutual fund queries when we return.
BSE Star MF Smart IFA के लिए Smart Platform, India's largest online mutual fund distribution platform.
Alright, we have Eicher Motors numbers flashing for you at the bottom of your screen. 489 crores in terms of a bottom line, pretty much in line with our expectations of 500 odd crores. Standalone revenue as well, coming in at close to around 2364 odd crores. The EBITDA coming in at 595 crores. The EBITDA looks like a bit of a miss as against our expectations. 595, we were working with a number